From 11FS, this is Fintech Insider News, and I'm your host, Kate Moody. Thank you for downloading this podcast, especially you on the dog walk. This week, we're talking public launches in the UK. Really exciting move for an exciting company doing awesome stuff in the investing space. We're joined by their co-founder to talk through why they're launching in the UK and why now and what it is they hope to achieve in the market. Solaris raises to focus on core values. When we're joined by a member of their kind of core team to talk us through the reasons behind this raise, what they're looking to do with it. And again, a really interesting discussion around what it is that investors are looking for in these interesting economic times. And have you been fooled by a deep fake? A really quite freaky example of Martin Lewis, a UK consumer champion, being used to try and flog a sort of fake investment scheme. So we talk about the pros and cons of AI and how it's impacting our sector. We get into all this and much more on today's show. So let's get to it. But first, a few brief messages. Back shortly.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak, so sometimes you just need a quick, human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Sized goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.
Welcome to episode 760 of Fintech Insider. I'm Kate Moody, Customer Strategy Director at 11FS, and I'm joined this week on Fintech Insider News by some brilliant guests to break down this week's biggest stories in fintech and financial services. Firstly, I'm very excitingly joined in the studio by Leif, co-founder at Public. Welcome to the show, Leif. We'll get your news in a minute, very exciting, but can you give our listeners, I suppose, the top line on yourself and Public if they've, for some reason, not come across you before?
Yeah, hey, Leif, originally German. That's where the beautiful accent comes from. You have been warned. But based out of New York, run Public investing app, also based out of New York originally. And there's a little news coming up we're going to talk about in a second. So
yeah, very excited to get it. Well, thank you so much for joining us. And German accents always welcome on the show, so thank you. We also have a Fintech Insider debut for Konstantin Kavvadias, Chief Investment Officer at Solaris. Thanks for joining us, Konstantin. Again, we've got some news coming up for you as well, but briefly, what should people know about you and Solaris, please?
So my name is Konstantin. I joined Solaris last year, and due to the current state of the markets, they thought it would be a great idea to give me this lofty title and go out and raise some funds. And Solaris, I would say, in a nutshell, is the leading embedded finance player. And obviously, I will be more than happy to explain a little bit more about embedded finance as we go on in the show.
Fantastic. Well, thanks for joining us. And last, but by no means least, we have Sean Forward, the UK CEO of Payabl. Great to have you here, Sean, joining from slightly exotic climes as well. So what should people know about you and Payabl?
Yes. Hi there. Hi, guys. So I'm the UK CEO, as you said, of Payabl. Payabl is a payment provider, which is based in the UK, Cyprus and Frankfurt. We provide a range of payment solutions, mainly credit cards, Visa and MasterCard, for a whole range of European customers.
Awesome. Well, great to have you here. And let's get into the news. So our first story, we've taken this from Business Insider, and that is that Public is launching in the United Kingdom. Public, an investing platform giving members access to invest in stocks, ETFs, crypto, treasuries, and alternative assets, has launched today in the United Kingdom. The UK is the company's first international market outside the United States. Well, hey. As well as investing in US stocks, users can also access Public Premium, which is an investor and analyst platform with advanced insights, live shows, and investor analysis in a live feed, which the company set up to guide investors. Public was launched in 2019 in the US by German co-founder Leif and Danish co-founder Yannick Marling. The company has raised over $300 million in venture capital funding to date. Leif, fantastic to have you here with us to kind of talk through this. Firstly, I mean, congratulations, super exciting. Obviously, we're biased, based in the UK. We think the UK is a pretty great place, but how do you decide on a new market when expanding internationally?
Cool, thanks. Yeah, obviously incredibly excited about this too. This has been some time in the making. And as we look to new markets, there's the obvious sense of being an American company, having been an American company first, from a perspective of just like, where can you find a lot of English-speaking people as well? Because, localization is hard and obviously it's easier if the people already speak the language. And so that kind of nailed it down from there. But then the other piece, obviously, is that the UK specifically has some, fairly innovative regulatory structures that make it actually, sort of say easier for a firm like ours to also expand into the UK, right? So in most countries, there's basically one way to do it, and the UK actually has multiple different paths on how you can enter the market, and that was also one, massive factor. And then obviously, right, it's a big country, right, 70+ million people, and so it's a pretty sizable market for us as well.
Yeah, and it makes a ton of sense. And I suppose you've said it's not been, this has been a while in the making. When did the UK become the definitive choice? How long have you been working on this?
We've been working on this nearly 2 years now. And so we hired a gentleman called Dan who had a stint at Wise as well, which is obviously a big fintech in the UK that I'm sure everyone's pretty aware of. And so Dan basically led the international expansion generally, and therefore also the efforts in the UK, obviously. And I think he joined nearly 2 years ago now. And so that was obviously the kickoff. And then from there, there's regulatory work, there's just general research we do in terms of like which market to truly start with and so on. Obviously, the UK was kind of top of the list from the beginning, but you always do your homework to see if your gut is truly right or not.
Yeah. You'd expect so, right? It's quite a big effort, so you wouldn't just want to flip a coin and go from there, right? But I suppose, what is the state of retail investment in 2023? Obviously, we talked about it a ton in the immediate aftermath of COVID. We saw a massive uptick in people engaging these types of platforms during COVID, but where are we at in 2023?
Yeah, I think you can really think about it as like every cycle or, basically has their own asset classes, has their own investing behavior. And, as you said, like 2020 was really, the COVID drop and, sports were off and people needed, new teams to rally behind, and those teams end up being companies. And that obviously was like, a big driver and just retail adoption. Then, 2021, obviously you had your meme stocks, right? You had your crypto rallies. And so that drove a lot of retail interest as well. And then you can really think of like now in the US, it's really the rate hikes that have driven a lot of interest. And so in the US, for example, we launched treasury accounts. So an easy way to invest into US T-bills. That, for example, just had good market momentum because, it's otherwise basically has been unheard of for a decade plus that you could get 5+% by, lending money to the US government. And so that suddenly became cool again. And so on. And then I think, generally speaking, obviously year to date, the markets have, specifically in tech stocks, obviously have had a quite a turnaround. And retail, the way, we see it in our app as well, is definitely, very, very highly invested in just large tech as well. And so therefore year to date has been honestly quite phenomenal for us as a company, generally speaking, but also, just great to see how some of the big tech companies basically reach new highs and so on.
Yeah.
Actually, I would say likely much faster than many people anticipated. AI trends and so on obviously will likely have helped in that regard as well, and so on. But so far, we really see that year to date, just like flows, so like just like inflows into the app, have been higher than ever, and so even higher than like 2020 and 2021.
Super interesting. And obviously, you mentioned the UK is a big market. It's also a market that does have some investment offerings in already, right? Like, what are you guys going to really double down on to differentiate and stand out to UK consumers?
The very start for us is to try to really offer the best experience to invest into US stocks out of the UK. And with that, so over 5,000 US equities on the app to start with. Obviously, we want to grow that further in the future as well, which is, I would say quite, more than most other also just neobrokers in the UK as well. Second, actual zero commission trading. And also very low FX fees. And so we literally charge 30 bips. And also we don't charge FX on every trade like you see it in some other places, but literally just once when you move money into your account, then you have that nominal FX fee, and that's really it. And so generally speaking, so to say, investing into US stocks on public will, you have a larger kind of breadth of US equities, but also just, much cheaper than most other places. And that's really where it starts. And then obviously the app itself, we've worked on this now for, 5+ years, is a quite mature experience, if I can say so myself. To the extent where, if you go to, the Tesla page, you can see how many cars have they shipped, right? You can have a really deep, dive into the last 10 quarters of their financials and their cash flow statements, and you can listen to their earnings calls and view their investor reports. And so like there's like a quite depth to the experience around those assets as well, and that's obviously something we've tried to perfect over the last few years. And so, therefore, I think also we're just entering the market with this, with an experience that kind of strikes this nice balance that we always try to hit of like being on the one side a very simple experience. So if you're new to investing, you will not feel overwhelmed. But if you're also a little more experienced, you can actually dive pretty deep and won't feel necessarily like, oh, this is not for me. It's like some beginner app, but it's actually something that is quite sophisticated under the hood as you start to dig into the experience. And that's the balance I was trying to kind of meet, and that's going to be the same in the UK as well.
Yeah, no, I can definitely see that being a really interesting design challenge. Konstantin, like you guys obviously are no strangers to market expansion as well. Listening to Leif's description of their journey, how does that compare to what you've seen in your business? What are the biggest hurdles for international expansion from Solaris's perspective?
I think at the end of the day, it is really the localization of the product, especially if you operate in a regulated environment where you essentially have to bridge the differences of the local regulations into your products and be mindful that you're not going to lose your economies of scale while doing so. I think we had a slightly different approach towards the European market and the UK. The UK, we felt that the best way forward was to go through an acquisition and use the local experience of local management and their teams to expand. That was the acquisition of Contes. And I would say the adjacent markets in Europe, and the largest one in terms of economies being France, Italy, and Spain, were then an organic move, if you so will, and a local investment.
Sean, obviously you're a UK CEO. What's your perspective on the UK market? Would you agree that it's welcoming to new players?
Yeah, I think it is. I think that it's interesting for us at Payabl. We obviously were passporting into the UK prior to Brexit. So the UK is not really brand new for us as a market. We're sort of still passported across. But after Brexit, I think there's... particularly in financial services, there is very much a sort of a shake-up in the flow here. And I think that after the strain of Brexit, things are starting to come back together again as far as us pushing forward and growing, particularly in fintech. We're seeing huge growth within our business, and we're anticipating that continuing over the current months. So, yeah, no, absolutely. I see the UK being a very positive place to be, not just London as well. We've got other fintech hubs growing, obviously with the East Midlands and Manchester, for example, coming through with Birmingham there as well. Yeah, I see it growing more and more, and it's definitely a growth area for us.
Leif, I mean, obviously it might seem like a bit of an odd question given that you're probably really focused on just launching in the UK at the moment, but you mentioned that you had a list of other markets you were considering. Do you see this move into the UK as giving you a base for wider international expansion, or is it kind of one market at a time?
We definitely will start with the UK and, ease ourselves in. Again, first market, there's a lot of learnings to be had, right, and so on. But generally speaking, its ambitions are obviously, bigger than that. Like we have, our mission literally states, to make the public markets work for all people. And if you say all people, then that obviously, includes people outside the US and, therefore now the UK as well. And so the ambitions are definitely there, but right now really take it one step at a time, right? The UK needs to be the focus and, also just to ensure that we're truly giving people the best experience possible.
Yeah, no, that's a great mission. Definitely one I'd love to support you on. Well, massive congratulations. I hope the launch goes super well. I'm really excited to see kind of the impact you guys have on the UK space. So let's watch this space. Okay, our next story comes from tech.eu, and that is embedded finance platform Solaris closes €38 million funding round. Embedded finance platform Solaris has closed a €38 million Series F round to strengthen governance and compliance, marking the next stage of growth for the company. The funding round was led by existing investors. Solaris covers 400 different APIs across categories like banking and card services, payments, lending, ID verification, and digital currencies. The funding comes on the back of some challenges for the brand in 2022. The company was subject to a special audit from the German regulator, BaFin. At the end of last year, Solaris announced that its CEO, Roland Foltz, would step away from the business. Konstantin, fantastic to have you here with us to kind of talk about this round. Congratulations on the raise. Obviously, it's not a super easy environment to raise in, so it kind of makes the achievement all the more impressive. Obviously, we've shown in the story that this is focusing on governance and compliance, but I suppose could you give us a bit more detail on precisely what that means, or what are the plans for this new funding?
Yeah, so thank you very much. So indeed, it was a challenging round because mainly due to the market sentiment, and then if you overlay a franchise like ours being challenged by the regulator, then it doesn't, it's not really simple to get it done. We got it done with the support of our existing shareholders, which also at the end shows that there is a conviction about the business model. And I think the slight detour here and the pause on high growth, it was necessary because our tech, our products, our partners, our revenues had outgrown significantly our processes and structures, which led then the regulator to rein in with a special audit and just make sure that, we will be in a good place still with all the growth that we were expecting to achieve. So that's why we said, all right, let's use that F round. Let's right size the structure of the company as a whole, and also always taken a closer look towards the specific regulations that we need to meet and to adhere, as we're not only a German company, but a pan-European with a UK footprint, which means we need to combine different standards under different licenses, which I alluded earlier, which also provides us with some challenges around the localization of product. So we need to make sure that we're not making any mistakes in the implementation. We adhere to all different sets of regulations, and that obviously needs time, but also money to get the right people in to build the right processes and structures around the products, and be able then on that back of a successful implementation to grow again at a higher speed.
Yeah, that really makes sense. I suppose it's just interesting, right? Because we talk about lots of raises on the show. I don't know if I've come across many super recently where it's been as explicit as you've explained it about, trying to really scale the processes of the company. Often people talk about a new hiring spree or a snazzy new feature launch. Actually, how it sounds completely sensible as a thing to be focusing on. I suppose, did investors get that? Was it a journey that you had to take investors on, or were they kind of on board and it was quite an easy sell?
Well, they were not specifically on board because these are typical growth investors. So they would like to see growth, although with a different flavor, i.e. being profitable rather than just top line growth. But nevertheless, the education was necessary to explain that if you build the structure right, then you have the ability to scale profitable products on your platform, rather than investing or under-investing in certain things that will catch up later and will be harder to fix and will cost more money down the road. And I think that the education took a little bit more time, but I think every investor got it in the end, and that's why they continue to support us with their investment.
Sure. And as we alluded to in the kind of the intro, obviously 2022 saw some challenges for the business. We know that's not unique. Everyone as they scale has challenges, but what has the business learned from that? What are you taking forwards?
I think we are now also in a slightly better position, I would say, than previous management, because markets are not honoring only growth now; they're honoring also profitability, which means ultimately, if they have to pick something right now, they would probably pick profitability over growth. So if you were to streamline operations, if you were to standardize processes, if you were to invest in the structure to get the maximum efficiency out of the platform, that probably would support that more than just, an additional market or a product or a feature where you have, a distinct return on the very, very specific business case. And I think that's why we were also very specific, asking people for their money to support us on that journey, rather than just a new market or a product.
Sure, and I saw a lot of nodding as Konstantin was talking through that. I suppose, what's your perspective on like these conversations with VCs? Do you think that kind of funding environment has changed in the way that Konstantin described?
Yeah, no, they do. I just wanted to say congratulations to both of you. It's obviously showing the current pulse on the market at the moment. I mean, with Payabl, we're in a fortunate position. We are profitable and growing significantly, and being in a privately held scenario, we're in a fortunate place. We can anticipate and plan our strategic growth within Europe and then beyond those spaces. So again, coming back, Kate, to the UK as being the hub for this growth. I think we're not talking quite so much these days, obviously, about Brexit, but some of these things have come through as a result of those changing situations within Europe, and yeah, very much so. I see it being a continuous, it's a continuous growth within those areas.
Leif, obviously, we mentioned as we were introing your news, you guys have raised over $300 million in venture capital funding to date. I don't know if you guys are looking at that environment at the moment, but what do you think? How is that shaping? How's the current investing environment shaping decisions that you're making for your business? Is it kind of changing your plans or encouraging you to focus on different things?
I would say, like most businesses, especially throughout 2022, focus had changed a lot from, again, the focus from top line growth to growth alone is not, it's just not enough anymore, and where it suddenly has to obviously also be that you build a proper business where the unit economics actually makes sense. And, I think specifically in fintech, you've seen a bunch of companies that also just had, borderline non-existent gross margins and things like that. And that's just things that just don't fly now anymore, right? And generally speaking, I think market moments like this are also quite good, because even as a company, I think it's a chance to, make sure that you're still running it sane, and also make sure that you're running something that if you ever enter the public markets one day, that you will not get slaughtered because you're actually building a business that can be sustainable, building a business where the unit economics made sense, and so on. And I think that is often also has to be driven within the company culture as well. And so I think moments like this are the ones where, the team can learn, that money doesn't grow on trees, and that you have to kind of, manage your budgets wisely, and, that maybe that billboard campaign should not be running, and and so on. And I think, in our case, we are like 155, 60 people, like 160 people now roughly, and so on. And I think we were still, so to say, comparatively speaking, small enough that that you really feel the cultural shift in the company when, like on those pieces. And I think that's actually where these moments are incredibly powerful. And then on the other end, I think you will, as we go into a cycle that maybe points more up to the right again, which I hope we're going to be soon again, then you're going to have so many more companies in the market that are just so much more resilient and, so much more fundable and sustainable. And, and the ones that weren't able to get there, might have not made it on the other end, which also means that capital can accumulate, within the companies that maybe truly deserve it, so to say. And generally speaking, I think, those market cycles are, for the ecosystem itself, maybe quite important. So,
yeah, no, absolutely. Konstantin, I suppose, obviously we've seen changes in the wider kind of fundraising environment, but I suppose for embedded finance players in particular, there's also been the shift of, not that long ago, everyone was just talking about banking as a service, embedded finance. It was like the buzzword, right? That's shifted a bit, right? Like everyone's now talking about this thing called AI. Does that have an impact on you guys as well? Like, does your sector have to be buzzy for investors to see it as valuable and interesting? Does it actually make it maybe easier to do what you want to do when you can just focus on your product and not have to sort of follow some wider hype machine?
Well, I think for us, and I will have to use buzzwords, right? So machine learning and all the good things are essential to scale a platform, right? So we cannot go away from let's say the buzzwords at all. But I think what has helped us in the current process is really to take a hard look on all products, on all markets, on all clients, and just think this end to end through. Is this the right product to have in all markets? Is this the right client to partner up with? Is this the basis of a sustainable, profitable business? And what is there in addition to think about to actually increase the efficiency of the platform? And obviously then you have to resort back to some of the buzzwords. But I think embedded finance and or AI and or machine learning are things that will stay. They will not be just a buzzword. These are trends, that they're firmly shaping up. It will take some time, to become a part of the traditional economies and be, also part of the discussion in a let's say in a non-buzz sense. But they're definitely here to stay, and I think that's what we used right now, just to shape up the story in a way that we believe that we can produce sustainable, profitable growth in the future.
Absolutely. Okay. Well, congrats again on the raise. As we've all said, like super impressive, and fingers crossed it helps you to kind of, as you say, lay that pathway for growth going forwards. We're just going to take a quick pause here. We'll be back very shortly.
200 trillion. No, that's not the number of times we've heard the letters AI this year. That's the estimated dollar value of residential property worldwide. The opportunity is massive and the space is ripe for disruption. So why does financial services keep getting mortgage offerings so wrong? Digitizing outdated processes has only led to complex, opaque, and exhausting user journeys that make the prospect of buying a home even scarier. The answer to this problem? Understand your customers' jobs to be done and meet them at their pain points with embedded, truly digital solutions. Partner with businesses to simplify and accelerate the home buying process. That's where the future is. Ready to take the first step? Visit 11fs.com/ventures and let's get to work.
Welcome back. Before we get on to the second half of today's news, a reminder to go check out the latest episode of our Fintech Insider Insight Show. In our most recent episode, we're asking, will PSD3 really live up to the expectations? With the new open banking legislation proposed by the European Commission, we're bringing you a chat from the archives with some industry boffins to lay out the successes and challenges of PSD2, as well as what they hope to see from this next chapter. You can find that podcast wherever you got this one. Okay, let's get back into the news. This story has been taken from the Financial Times, but it's also been repeated in lots of other places as well. Revolut's US payment flaws allow thieves to steal $20 million. A flaw in Revolut's payment system in the US allowed criminals to steal more than $20 million of its funds over several months before the company could close the loophole. This is according to multiple people with knowledge of the episode speaking to the Financial Times. The problem stemmed from differences between European and US payment systems, which meant that when certain transactions were declined, Revolut would erroneously refund accounts, handing them its own money. Individuals were encouraged to try to make expensive purchases that would be declined and then cashed out through ATMs. Although Revolut recouped part of the roughly $23 million stolen by pursuing some of those who had taken funds, the net loss is said to have been about $20 million. That's equal to almost 2/3 of its annual net profit in 2021. The problem first appeared episodically in late 2021. Organised criminal groups then took advantage of the fault early in 2022. Sean, as our payments expert on the panel today, want to pick your brain first on this one. This story is citing differences between US and European, UK payment systems as a main issue. How different are those payment systems? Do these difficulties that Revolut are citing kind of ring true with what you've seen?
Yeah, I think that at the moment, a lot of this is speculative. There's obviously the Financial Times had a very short piece on that with very little, detail. So, it is very difficult for us to sort of speculate from afar here. But one of the things I saw specifically that could be happening is not actually technical differences. It could be process differences. The way I read this is that it could well be the way that they were managing maybe their chargeback process. So what I was seeing is that in the UK and Europe, if you've got a problem with your goods or service, then you'd contact your bank, and the bank would go through the normal retrieval request to get to the bottom of what the problem was. In the US, generally the process is more aggressive as far as the issuing banks are concerned. They're very much on the consumer side. And what they would generally do, the consumer banks in the US would immediately issue a credit to the cardholder. And the process of chargeback would not continue in the same way. It would sort of cut off at that point. So I was seeing here that maybe it's a process issue where maybe Revolut were anticipating, the normal process of the chargeback flow happening as if it would happen in Europe, but not being the case in the US. The thing that surprised me is obviously the scale of the issue. Surely those things you would hope, at least anyway, that that type of scale of problem would be picked up earlier within the process. But the way I saw this, as I said, as I read it, was I don't know that it's necessarily technical. It sounds that it could be maybe technical, a little bit of process there as well.
Okay, no, that's an interesting point of clarification. I suppose, as you say, this is all speculative at this point, so we kind of need to kind of wait and see further details. But it does sound like a lot of money, right? Like, are these kinds of issues and these kinds of sums of money more common than we would expect, or has the Revolut team dropped the ball here?
Well, look, problems happen all the time, and you have to react and you have to be responsive to new technology. Part of the problem that we all face is growing and expansion, and moving into different segments and different markets. Always need to have careful consideration to make sure these things don't happen within your watch. I think that the extraordinary thing for me is the potential scale of this. That seems like a lot. It is a lot of money. Taking a period of time to highlight this, it just reinforces the need that we're on top of our reconciliations and making sure that the systems that we had in place. I think both Konstantin and Leif had a reference to this earlier in the conversation, is about investing in processing procedures and technology to make sure that we can keep pace of where we are as far as our growth in our businesses are concerned. But to answer your question, Kate, I think the things do happen. They happen all the time, and I think we need to just make sure that we keep an eye on these things, and the growth is managed and controlled from a technical and also a process point of view as far as the operational aspects are concerned.
I would also argue in most cases it's a KYC issue more, and most fraud starts at KYC and who you let into the door to be a customer in the first place, and and from there that's where most fraud issues start, right? And then sure, if there's some process issues or so on, like that stuff can happen, and like having some sort of fraud loss in any consumer fintech is quite normal. But whenever that goes up to an extent where it might be too high, and I would argue that in many cases it's also a KYC issue. Yeah,
and I guess you guys are probably living at the moment this challenge of having to move from processes and systems that work in a US context to working out like what adaptations need to be made in the UK. Like, have you seen any of these types of conflict or tensions that Revolut seem to have experienced between the two different systems?
For us so far, obviously, it's super, super early, right? We had some, secret beta users on the UK app, and today the first users are really being onboarded and so on. So to be told, I guess. But for us, it's a little bit different because we're actually onboarding people onto US brokerage accounts, and so there's basically just one transfer that happens. While as you kind of deposit money to the app, and so it's a little bit of a different, system, so steady payments and so on. So
okay, yeah, no, that makes sense. And Sean, I suppose, do stories like this impact Revolut's hope of a banking license? We've been following for quite a long time their travails with the UK regulator. Do you think these kinds of scandals could? Well, scandals is probably too strong a word. These types of stories could push things back further.
Look, I think the regulator in the UK keeps its eye on current trends and news. I can't obviously comment on if this will affect the next part of the process for Revolut. They've got some amazing products, and they've always been at the cutting edge of fintech and some of the growth that they've shown within the various sectors and markets has been amazing. I think their top technology is incredible as far as the packaging of the services that they have. However, the growth aspect, and really it's been the thread and the flow of our conversation here today, is that we've got to make sure, and all organisations have to make sure that we've got good processes in place, good technology in place to make sure that we can manage the growth and not have issues that are going to be problematic or potentially problematic within the communities that we're providing our service to, but also to the regulators. The regulators are very very focused on making sure that the consumer and the customer is safe and secure, and their money is safe. And it's extremely important that all of us within the industry ensures that our systems make sure that can happen. And I know, from our point of view, that's a very key focus of our business and our technology, is to make sure that that growth and that next step is always very well thought out and managed carefully.
Yeah. Konstantin, the naysayers for Revolut kind of always like to point to these difficulties with the regulator and kind of use that to, say that they're not going to be as successful as people claim. You mentioned earlier, Solaris has obviously also been in a position where you've had to have conversations with regulators. I'm intrigued to get your perspective on Revolut. Are they still a fintech success story? Do you think they're still going to achieve great things in the future?
So it's really hard to take this view as an outsider, not being part of the management. I think the best place to be right now is being at the helm of the company and answer that question. What I can say, though, is we have a longer journey with the regulator than most of the other fintechs. I think where we saw significant progress with regard to the relationship between the regulator and us is they obviously want to safeguard the public interest and ultimately the consumers, and save them from anything that could be detrimental to their wealth. What helps then, obviously, if you're a cutting edge company like us and or Revolut in that sense, is to educate the regulator, to shape policies at the end together. Because if you were innovating, the inclination of the regulator is to greenlight everything you do relatively low, because they only have the downside, right? If something goes well, nobody will go back and like, oh yeah, Mr. Regulator, you did a great job. They will always come back and say, oh, how could this happen under your watch? So I guess the risk return profile is slightly different. So ultimately, to help them understand, the way you're doing business and what technologies you're using to succeed in that particular field, is essential for them to understand. Once they do that, and obviously they're not going to move with the same speed as the average, fintech, I think then you're in a good place to discuss the next step forward. And I think probably Revolut will do the same thing. They will go explain what potentially went wrong, how they fixed it, and that how they intend to continuously, grow while maintaining and safeguarding all their processes and products.
Yeah, no, absolutely fair point. And again, so I suppose something to emphasize, and one, this is an emerging story, and two, like the money that was lost was not customer money that was lost. It was kind of money that came from Revolut itself. So again, I think that's important to emphasize.
And I would argue that like I think like the question of like, is Revolut still, a successful company and whatnot, like, yes, of course, right? Yes, of course, and everyone will have bumps in the road and stuff, of course. And, at the end of the day, I think even within fintech and whatnot, like everyone who's, trying to innovate, everyone who's, trying to push the industry forward, like we should, generally speaking, we should all applaud that and try to, so to say, support each other, even if we might be competing on the battlefield somewhere, because at the end of the day, that is, that is just generally good for all of us in the industry. And so, like, I would say that question should not even be a question.
Okay, well, on that note, I'm going to move on to our next story, but yeah, we'll keep watching that one. Our next story comes from the BBC News, and that is Martin Lewis felt sick seeing deepfake scam ad on Facebook. UK consumer champion Martin Lewis said he was left feeling sick by an online scam video featuring a realistic computer-generated likeness of him. The widely circulated ad, which attempts to solicit money for a supposed investment scheme, appears to use AI-powered deepfake technology. Consumer finance expert Lewis said it was weird and pretty frightening to have his face and voice imitated. In the advert, which appeared on Facebook, a fake likeness of Lewis encourages people to sign up for what is claimed to be an Elon Musk-backed project, calling it legit and a great investment. As a household name and a founder of the website Money Saving Expert, Lewis's financial advice is relied upon by millions of people in the UK. To give you guys, our listeners, a taste of how convincing this clip was, or to decide for yourself, here's a sample of the fake Martin Lewis.
Elon Musk presented his new project, in which he has already invested more than $3 billion. Musk's new project opens up great investment opportunities for British citizens. No project has ever given such opportunities to residents of the country, given the interesting features of the app and having seen how it works.
We asked you, the listeners of 11FS, if you've ever been fooled by a deepfake image or video online. 70% said no, I'm far too clever for that. And 30% said yes, I have been tricked. I wonder if actually like the 70% who said no, like would even know if they had been. Will any of our panel confess to being caught out even briefly by a deepfake image?
Not knowingly, at least, right? So I wouldn't pretend being too clever to spot like any potential deepfake, but I would say at least not to my knowledge.
Yeah, someone pointed out to me the other day, actually, just doing this podcast, puts your voice out into the public domain. So, I don't think there's really going to be any criminal benefit to imitating my voice. But yeah, Leif, you guys are looking to empower people to invest. How damaging are these sorts of things?
Obviously, on the one side, it's super fascinating, and there's a lot of, really interesting, things that that could enable in the future. And whenever there's new technology, some scammer will figure out how to use it for their benefit. That's one of the first things that will happen, right? And of course, safeguards will always lag behind, no question. Generally speaking, obviously, but to your point, right? Even your voice right now, someone could clone it, call up your mother, and extort her for money, right? And so on. So and so long story short, yes, there's definitely, I think there's like harm that could happen even to, so to say, any person out there with this kind of stuff and having their voice out there and so on. In the context of, even now investing and so on, I would say it's like my worry would be mostly around misinformation around public companies and things like that, right? So you could totally see how, some news story around some public company could be, faked and put out there, and that could have a short-term, quick impact on a stock price that someone could take advantage of, and things like that. And so I think those are things that are quite interesting is maybe the wrong word, but that's very interesting, I guess. But and so on. I think the other piece is really just like social engineering, right? So trying to convince someone that you're someone that you're not, trying to hack into someone's account and so on. And so I think that's the other part of it. And so for companies like us, it falls into what are your safeguards in customer service, right? How educated are your customer service representatives that they kind of understand and know this technology and like what, kind of things to spot for and the like.
Absolutely. Sean, as Leif said, scams are getting more sophisticated. It's a big thing. What do we as an industry need to do?
Yeah, I think education is always the key, in my view, for both the customers and also the businesses. We work on a B2B model, so we generally need to be in close contact with our business clients to make sure they're fully up to date and current on new technologies and new things within the market that will ensure that they stay on the right side of these things. I think that the interesting thing for me is how much sort of better or how much more sophisticated these types of things have become, and how as we're saying that with the deepfake processes, it really is quite scary. And I think often what we need to do is make sure that we're analysing our sources of information. Is that on the internet there's so much information out there, and there's so many mediums for people to use. Finding the trusted source of information and news is very, very difficult. And when you've got somebody like Martin Lewis, who has really, within the UK in particular, got that level of trust within a very, specific consumer group, it really is very disappointing and sad that people are sort of taking advantage of that. And again, it's very important that that those types of things are immediately. Education is put out there on his website and on various mediums to make sure that those things are discredited and people know about it. So the education, Kate, for me is always the most important aspect of these things.
Yeah, I mean we do have a very international audience, so I suppose definitely good to explain a bit more about Martin Lewis and kind of as you say, that trusted position he has. Konstantin, is there like a German version of Martin Lewis, like a sort of consumer champion kind of figure, or is it sort of a bit more of a UK niche?
I would say it's rather a UK niche than a German phenomenon, but I think you can make up those things with public figures endorsing products and or general trends whatsoever, and then try to profit from. So I think at the end of the day, this will be a new potential fraud scheme that as Sean said, I think the only way forward is to educate people as much as you can, and then continue, to build fail safes within your organization to ideally spot them. I don't know exactly how this would look like in the future, because it's pretty scary what people can do right now, and not having already a fail safe within the company. But I think this is the topic that everybody has picked up and educates people the best way possible, and thinks of how to protect the consumer, but also the specific company.
Yeah, I mean, obviously, we're focusing on like the problems created by AI, but inevitably, we can't have an episode of Fintech Insider about talking about the potential of AI. And I did see, when I was doing my research for the show, you guys do have like your sort of coming soon banner above, what you've described as your sort of AI co-pilot, and so obviously it's a space that you guys are dabbling in. How big do you see the potential positives being for AI?
Yeah. First, the coming soon banner is gone. It's available in the app. And so I think it's massive. I mean, so the first thing that we've done, obviously, we have multiple points in the business where we're applying AI already. And so one obviously is things like fraud detection. The other one is things like CX, which is more, which is like semi-user facing. And then we put into the app like an AI research assistant we call Alpha. And you can really think of it as just you go to any stock page, you swipe down on that stock page, and you can ask any question about that stock. And so we fed basically a GPT-4 model with, earnings call and data, with transcripts, analyst opinions, custom company KPIs, and so on. And what it suddenly does is that it makes it incredibly easy for people to just do research. And you don't have to necessarily know where to find the information. You don't necessarily have to know how to ask for something. Also like Alpha, for example, if you ask something, it will give you, potential follow-up questions to ask. And so it kind of guides you into helping you to try and dig deeper into a topic or in a company. And so where we see the immediate kind of now advancement is really the sense of just to truly democratize investment research even more, and by that just inspiring more people to do research, which I think generally is a good thing when you do that around investment. So
yeah, fingers crossed. Okay, sadly, have to move us on. So now for the section of the show called Big Click Energy, a quickfire roundup of some more click-worthy news this week. So just one from me today, taking this one from The Guardian. Jeremy Hunt unveils pension fund reform plan to help UK startups. The UK Chancellor Jeremy Hunt has announced plans to merge workplace pension schemes and release up to £75 billion of retirement funds for fast-growing startups. The proposals aimed at mobilising investment from the UK's £2.5 trillion pension sector were outlined in a speech to top executives and MPs in central London at the Lord Mayor's annual Mansion House dinner on Monday evening. He will also confirm that the Treasury has struck a deal with 9 of the largest pension providers that would result in firms earmarking 5% of retirement funds towards private investments. The government will create new investment vehicles that would give future retirees a stake in homegrown private companies, including in fast-growing fintech startups. Pretty rare for something to do with pensions to be massively click-worthy, but obviously it's a very challenging fundraising environment at the moment, so anything which has the potential to support growing businesses is very welcome. The government has also said that it thinks this could translate into a 12% bump in the pension returns for the average earner who starts saving at 18 years old, so kind of the average age that most people start working. So, if you've got your optimist hat on, it sounds like a win-win for everyone, and you kind of think, what's taken so long? But I do have that kind of skeptical part of my brain that thinks there must be some downside here. But yeah, obviously anything which frees up funding is to be applauded. So fingers crossed they're able to push this through, and hopefully it won't take forever, because we know lots of these initiatives, especially when there's multiple large companies involved, can often take a long time to actually push through from sort of an announcement through to actual tangible funds that can be issued to the companies that desperately need them to keep growing and challenging and providing support to our economy. So this would normally be our sort of and finally section of the show, where we take an offbeat or light-hearted story from the week. But this week we're going to use this part of our show to mark the sad passing of someone from the UK fintech community. Nick Hungerford, the co-founder of investment app Nutmeg, has sadly died at the age of 43. He was diagnosed with a rare form of bone cancer in 2019. Hungerford set up Elizabeth's Smile a few months ago, which provides resources for children who lose a parent. Tributes have poured in from across the fintech sector that he helped transform. Nutmeg, the firm he founded in 2011, said Hungerford was one of Britain's most successful fintech entrepreneurs. And in 2021, Nutmeg was bought by JP Morgan for £700 million and has been incorporated into its Chase brand. Our own CTO at Lemon Affairs, Ewan Silver, worked with Nick at Nutmeg and wrote on LinkedIn, Nick Hungerford has already made an impact on the world, founding Nutmeg and helping to change the way a huge number of us plan and invest for the future. He is, however, leaving a much bigger legacy by setting up Elizabeth's Smile, which is a charity aimed at supporting children who have lost a parent through illness. Yeah, super sad news. We're lucky enough to be able to spend the majority of our time talking about the good stuff, new market launches, new investors, new partnerships. But one of the reasons why we make this podcast is to support the fintech community, to connect and celebrate the people who are working to make financial services better. And Nick was definitely one of those people. So yeah, here's to him. Sending our best wishes to his family and friends. And the charity, as we mentioned, that he set up provides practical resources for children who lose a parent in the UK and the US. So we'll include a link to that in the show notes if you'd like to support it and are able to. Okay, well, that wraps up this week's news show. Thank you again so much to today's guests. Where can people find out a bit more about you and your company's Leif?
First, obviously, go to public.com and sign up to the UK product. You should do that right now. And then obviously on Twitter at public, myself at Leif, Leif Thunder. And I always say the Thunder part is for if we ever meet each other on a beer somewhere, I will tell you that. But yeah.
Awesome. Well, yeah, all the best for the launch. Super excited for you guys. Konstantin, what about you?
Yeah, I think LinkedIn is great to connect, and then also obviously follow the company in our newsletter. And we do also have a podcast about embedded finance for everybody out there who wants to continue listening.
Always recommend a podcast. Absolutely. And Sean, what about you?
Yes, so Payabl.com is obviously the best place to get information about Payabl. Myself, again, LinkedIn is always the best. So Sean.forward, that's FORWARD on LinkedIn. So very happy to take any comments or info there.
Awesome. And as for me, also you can find me on LinkedIn, Kate Moody, or you can drop me an email, kate@11fs.com. Thank you so much for listening. You can join the conversation on social media or email podcasts at 11fs.com. Thanks very much. Goodbye.